Welcome to Give Smart, the video series where we break down the legal side of giving. I'm Isabella, and in each episode, we talk to experts who help companies and nonprofits navigate the complex but important world of compliance and charitable fundraising. Today's episode is all about nonprofit registration. I'm joined by Ron Barrett, Vice President of Nonprofit Services at Cogency Global, and a leading voice in fundraising compliance. Ron advises organizations on multi-state charitable registration and solicitation rules, and he's the author of Nolo's 50-state fundraising registration guide. Ron, thanks for being here.
It's wonderful to be here, Isabella. Thank you so much for having me on the video interview. I appreciate it very much.
So to kick us off, could you please introduce yourself and share a bit about your background and the work you're leading at Cogency?
Sure. So I've been with Cogency Global for 18 years. I'm the Vice President of Nonprofit Services at Cogency Global. I'm a product manager, so I'm in charge. I wear different hats: marketing, sales, product development. I help operations with resources that they need to do their work for nonprofits. As you'd mentioned, I am the author of Nolo's digital guide. I like the way that you shortened that. The full title, I'll spell out that, but it's a mouthful and it's a page turner. Nonprofit fundraising registration, Nolo's 50-state digital guide. I update it twice a year. It is digital only now. The reason it's digital is because there's so many changes every year to what's required at the states for charities to register, renew, and comply with fundraising statutes when they're fundraising nationwide. And so the benefit to having it digital is that it can be updated frequently, so it's twice a year. It's a subscription product, and it has links to everything you would need, how to register, the charity's office, their contact information, the forms, the online filing systems, the statutes, pretty much everything that you would need to register, renew, file for extensions. If you're in a category of charities that are widely exempt, like hospitals or religious organizations or educational institutions or educational foundations, there's also information in there about exemptions. It's what I like to say is it's 310 pages of everything you wished you didn't know about this subject.
Sounds riveting. No, but actually it does. I'm wondering, so you mentioned you update it twice a year. What updates in the most recent edition should nonprofits know about right now?
There's been a trend in the last few years to convert from paper filings to online filing systems. So I guess that would be one thing. And that's a benefit to charities. It's still a little bit inconvenient because there's no single portal. You do have to deal with each state's system, so to speak. But at least with the online filing systems, they usually, and I think in all cases, they retain all of your information from one filing to the next. And so when you're going to renew, a lot of the information is already there in their system. And so it makes renewing a bit easier in that respect. I guess another thing to keep in mind is that because of these filing systems that are trending to almost all states now are online, there's about 7 that aren't. Illinois is the latest. They just came with an online filing system that's brand new. It means that the unified registration statement is really no longer applicable. It's not accepted in very many states anymore, both for initial filings and renewals. And I think the third thing, and it's a new thing, but I think it will be trending in the future, is that California a couple of years ago enacted Assembly Bill 488, which created a new category of registrations for platform fundraisers. So all of those platforms that are out there that are helping charities fundraise online, they're now a category that needs to register in order to comply with fundraising law in the state of California. The same is or will be true in Hawaii, effective January 1 of 2026 of next year. Their law is very much similar to California's. And I did talk to some of the New York regulators about it, and it was a high-ranking official in the charities office said to me, "We're looking into it. We're waiting for California to kind of iron out the kinks, and then we'll probably be ready to go in the not too distant future." But for the charities that are fundraising and that are registered in California, they're finding out that there's now a higher level of due diligence required in terms of making sure you stay compliant. Because if you fall out of good standing in California, the platforms will remove your charity from their listing, and you no longer can fundraise on their platform. And so that's very damaging, potentially damaging for some organizations.
Absolutely. Can you explain a little bit more about the platform charities and what sorts of organizations would qualify as such in California?
Sure, sure. So a platform charity, which is one of the new registrant types, as opposed to a platform fundraiser. A
Mm.
platform charity would be something like Network for Good. Network for Good is its own charity. It's a 501c3 organization that has a platform that makes that platform available to other charities to fundraise. And they're required to register nationwide as a charity, one, but two, they're required to register in California under that new statute requirement. That would be differentiated from, say, a platform fundraiser, which typically they're for-profit organizations that have a
Mm.
platform that they offer to nonprofits to use to fundraise for a fee. The problem with those platform fundraisers and platform charities is that in the existing statutes there wasn't anything that really addressed them. The statutes address charities that need to register. It addresses fundraising consultants, fundraising counsel, professional solicitors, professional fundraisers, commercial co-ventures. But none of those really fit into what is actually going on in line for the fundraising platforms. And so they realized that it was a situation where current law just was not keeping up with today's technology and that they needed to amend their statutes to address it. And they did. They finally did. And I think for the better. And that's why I think it's going to be a trend going forward that platforms in every state that have solicitation registration requirements will probably in the next 5 years have that a similar category.
Totally. It seems like the original statutes were written for a pre-digital world almost, and now
Hmm.
with most fundraising, I think, done
Well, a
online.
lot, yeah, yeah,
A lot, at least.
yeah, yeah. Direct mail is waning, but it's
Mhm.
not gone because there's a lot of organizations that really rely on and have relied on heavily on direct mail. And so what they're using direct mail for though is to further convert to digital.
In terms of busting a few myths about fundraising compliance, what are a couple pieces of misinformation about fundraising compliance that end up costing nonprofits time or money or both? And what's the correct approach in each case?
Cogency Global is a registered agent company, and so we do a lot of corporate work as well, in addition to fundraising compliance. And
Mm.
so we're a nationwide registered agent, and we can qualify nonprofits to conduct business in all the states and also file corporate annual reports, annual and periodic reports for them. A lot of times, charities come to me thinking that they need to qualify to conduct business in many states or multiple states simply because they're fundraising in the states, say, sending emails or letters or making phone calls. And that's
Sure.
not the case. And what can make it confusing in terms of misinformation or just not accurate information is that there are some folks in the market that are providing similar services to Cogency that will say that you need to qualify to conduct business in 10 states and that you need a registered agent in 12. And the reality is no, that's not really true. That's something that I warn folks that if they're being told that they need to qualify to conduct business in a lot of states and then have registered agent appointments in a lot of states,
Hmm.
that's a red flag. So they should question that and push back. In the states where a registered agent is needed, if you're in that state, if your corporation or organization, nonprofit organization is in the state, you can name like an individual from the board or an officer or director or somebody, a person. The organization itself can't be its own registered agent,
Oh,
but you can name an individual at the corporation, at the nonprofit, to accept service process. You don't want to set it and forget it. You want to set it and make sure it stays current. And so when somebody leaves, you have to know that, okay, well, I need to update that person, that name. And so Cogency acts as the registered agent. That's one of our core services. It's one of our largest services that we provide, and we do it nationwide, and everything's done under our roof. It kind of expands the portfolio of services that we offer to nonprofits. It's registered agent, corporate filings. If there's a name change, we can do name change amendments, DBAs, the charitable registrations, the renewals, the extension filings, the sales tax exemptions. We prepare and file sales tax exemptions for our clients, and
mm.
then we also do commercial co-venture filings for profits that enter into a charitable sales promotion with a nonprofit.
You mentioned the sales tax rules, and I'm wondering if teams ever mix up the federal tax exempt status with the sales tax rules. And if so, how do those two things differ? And what common mistakes do you see nonprofits make when they're dealing with these two things?
Yeah, so I guess newer organizations that aren't familiar with the process, it can cause some confusion.
Right.
Organizations that have been around for a while, they completely understand it. But for newer organizations, the federal tax exempt status is separate than anything involving states. So if you want to be exempt from federal income tax, you have to file a Form 1023 or 1024 application with the IRS for tax exempt status. Charities file the 1023, so that gets you in the good position of being exempt from taxes on the federal level. Most states will recognize that income tax exemption and just automatically exempt you as well in their state. Some don't, like DC does not, California does not, Texas does not. There's some that don't. And you have a separate state filing that's required for income tax exemption in the state. I guess one of the biggest sources of confusion, though, is that a lot of charities think that, okay, well, I'm income tax exempt, federal and or say state income tax exempt. They think that they're automatically eligible, or automatically that their purchases are exempt from sales tax. And that's not the case. Simply having a state or federal income tax exemption doesn't necessarily mean that you have a sales tax exemption. There's other things that need to happen to make that to put that in place. Sometimes there's some confusion about having a sales tax account. In other words, registering to collect and remit sales taxes. So say you're selling merchandise as a nonprofit. If you're selling merchandise on an ongoing basis, it depends on the level of sales and the state, but there's a good chance that you might need to register to collect, report, and remit sales tax that you've collected as a result of sales that you've made to states.
We've talked a bit about, online giving, digital fundraising. Any kind of digital fundraising activities can make a small nonprofit, like a national nonprofit, overnight, meaning that they need to register in a lot of states. So before a newer organization turns on a donate button or launches some kind of campaign page, what's your short online first steps checklist? Like first 3 things that this new charity should do?
Well, they're definitely going to want to make sure that they're registered in their home state. That's a given. Beyond that, they should be aware that there's another misconception in the market that a Donate Now button, and there's certain people that will disagree with me on this, but I think I'm right. I'm the author of the book, so I'm right. Anyway, so some people will say a Donate Now button means that you're soliciting in every state because anyone can find it and donate, and I don't agree with that. And the state regulators kind of agree with me as well. They created a document in 2001 called the Charleston Principles. And it's an 18-page piece of guidance from state charities officials and the state AGs. They came together in Charleston, South Carolina in 1999, basically to discuss the internet and online fundraising and how it's impacting fundraising and the fact that there's nothing in our statutes that address this. And how do we advise nonprofits that are fundraising online and who want to be compliant with fundraising law and fundraising compliance requirements? What do we tell them? And it basically boiled down to a couple of things. If you're not targeting residents in a state directly in some way, like say you're sending them emails or your newsletter, and in that newsletter or in that email you're saying, go to our website and donate, and then it goes to your Donate Now button. Well, that's a solicitation, that's a direct solicitation, and it requires registration. But if you're not targeting people in an individual state and they're just finding you, they're finding your website, they're finding your Donate Now button, and you're receiving donations. So the receipt of donations doesn't necessarily trigger registration. It's solicitation itself that requires the registration. Receipt does not. Somebody could just find out who you are and write you a check for 10 grand. You didn't solicit that person. That doesn't mean you need to register in their state. But it's a similar situation with online. If people are just finding you, making a donation, then you don't need to register. And that's what the Charleston Principles basically says. However, there's a couple of conditions and a couple of thresholds that they say. And the 2 thresholds, one is the repeated and ongoing threshold, and the other is the significant threshold. So the repeated and ongoing threshold is the states say in Charleston Principles If you receive 50 or more donations in a year from donors in our state, then you should register. And similarly, the significant threshold is $25,000. So if you receive $25,000 in donations in a year from residents in our state, donors in our state, you need to register. So it sets up a system where you need to know who's giving, how much, how many donations are being made, and how much by state. And then when you hit one of those two thresholds, then best practice says you should register. Unfortunately, not too many people, or not too many states really acted on the Charleston principles. What I say, in the absence of any formal declaration, that you follow the Charleston principles in a state where they are not able to provide you clear guidance. That would be a best practice, in my opinion.
Let's say you're a new lean nonprofit, you want to start fundraising by Giving Tuesday, which is just about a month and a half away. Where should they focus first? Like, what are the things that they should do first, and what can wait for phase two?
Yeah, I think obviously registering in their home state.
Okay.
It really kind of depends on what activities and how they're going to promote that. If it's by email to lots of potential donors and they know where they are, they might want to register in the states where they know where they are. Some do take a wait and see type approach, and wait and see what the results are of the campaign. And that's applicable to Giving Tuesday and other campaigns. I kind of liken it to driving 60 in a 55. Yeah, breaking the law, but no, I'm not going to get stopped, and if I do, I'm going to get a warning. And so it becomes an exercise in your risk tolerance. You know, technically, the statutes say one email, one phone call, one letter, one event, one personal ask, one campaign, and you're soliciting, you need to register. And so when it's online, it's hard to say, because are you really soliciting directly? Sometimes it might make sense to have some sort of like a strategic registration approach, and that might be 10 states don't require anything. There's 4 other states that don't require most organizations to register. So that's 14. Register in your home state. That's 15. Maybe register in a couple of neighboring states, because some of your board or your officers or volunteers or potential donors that are nearby. So register in a couple of neighboring states if you like you're in a tri-state area. And then register perhaps where you think the higher dollars and the higher number of donors are going to accumulate quickly, say California, Illinois, Florida, New York. All of a sudden you're up to like half the states in the country, and from a population perspective, you've probably covered like 80% of the country's population. And so that's a good strategy, where you limit the number of states where you're registering, but you maximize the impact in terms of being able to fundraise and do it so legally and registered. A nationwide state registration, which I typically say is 36 states plus DC plus an exemption file, a one-time exemption filing in Missouri. That is usually a nationwide registration. It can cost upwards of 10, 11 grand a year to register and then renew.
That is significant, especially for like a newer charity.
Yeah, and so for a newer charity that takes more of a strategic approach, and one that's willing to take a little bit of risk too, can cut that bill way down.
Would love to talk about the role that technology plays in all of this. Where do you see technology helping reduce the workflow or the workload in fundraising compliance? How does working with Change help Cogency support clients faster without losing that accuracy?
Obviously, if the states could work together and create a system that they all tied into, such there's a single portal so that you answer all the questions you need all at once for all 37 states, that is the ultimate goal and victory, I think, in terms of having a single portal approach that's online. It doesn't exist, though, and there's been a lot of efforts over the years, dating back even more than 10 years ago, and as recently as just pre-COVID, to create that single portal. The Urban Institute, Candid, and City Base and a few others tried to do that. Those online filing systems, I think over time, are going to be able to integrate and talk to a system like what Change has. And Change has really changed the landscape, so to speak, quite significantly in terms of efficiency. It makes the filing process way more efficient. I foresee an integration of, say, like a single portal with IRS Form 990 software or with fundraising software, where you're fundraising in certain states and you integrate compliance into the fundraising software or the IRS 990 form preparation software and just do it seamlessly so that all of the nonprofits and CPAs and attorneys that are using the IRS software for the 990, or similarly all of the charities and fundraisers that are using fundraising software, can all integrate with, let's say, a single point or single filer platform for the states to be able to comply. And I think AI is going to make that possible, probably within the next 5 years or so.
I was going to ask about AI and where the biggest opportunity is for AI to help. And it sounds like you're saying to consolidate all the forms or all the filing systems into one.
Yeah, we'll create a system that integrates with the online filing platforms with each state, such that, it could be independent and just stand alone. So you enter all the information in an AI-driven software that is then integrated with the state online filing systems and automatically gives the state the information and data and fee that it needs for each state. So you complete it once, and then it's set up to file, pay, and you're done. That's where it's going, and that's where it needs to go. But the next step after that, or like in tandem with it, is creating that also with an eye towards integrating it with IRS Form 990 software and fundraising software. One or the other or both. I think there would be a market for either one.
That's really interesting. I know Cogency has just started using Change internally, but if you could just kind of describe what Change does and how Change fits into this landscape.
So just to give you an example, Mississippi, for example, when you have to file a renewal in Mississippi, if I recall correctly, there's 10 separate screens that you have to scroll through and provide data, information, and answer questions. You're going to need to provide answers to ultimately, like, in terms of like data input fields, like 200 to 250 data input fields. Using Change's tool, their program, reduces that to 20 or 25, a factor of 10. And so you can see like that is a huge time savings. So the efficiency that is gained is phenomenal. It's going to create more accuracy for us and greater capacity. And then also their 990 AI-driven OCR tool that extracts the data that we need from the 990. So in the past, that was like a very manual process. We would go in the 990, extract the data that we need manually, in terms of just entering it into our system, and then we would then get it over to the state in the format that they needed it online. Now, we do still have to verify that those numbers went in correctly and that they're all there, but that's still, it's a substantial and significant reduction in effort on our part and an improvement in accuracy. And so those are really crucial.
Absolutely, yeah. I think we're seeing this with AI across many industries, but it's AI to support humans in a way. So it's like it's not that we're completely getting rid of the human touch. Yeah. It's still there. It's still needed.
Yes,
to some extent.
It just makes the human element more productive and increased capacity, which allows us to serve more charities and more nonprofits so that they can focus on their mission and leave the circus behind. There's a video that we created that says, "Focus on your mission, leave the circus behind." If anyone's interested in seeing it, just Google that, and it'll add some levity to your day. It's a 1-minute video that's been viewed 1.2 million times over the last 5 or so years, and something that I'm really proud of. Half of the people in the video are employees, former or current employees of Cogency, and the other half were actors. But it was an award-winning product video on charitable compliance. So it's focus on your mission, leave the circus behind. And so it allows us to serve more nonprofits in that capacity by being more efficient.
We've got to link that below. I haven't seen that video. So just one last question. Is there anyone like don't do this you wish you could broadcast to every development team or legal team at a nonprofit? Like one, like do not do this kind of thing.
I would say right size your registration. Don't overdo it, especially for newer organizations. And so sometimes newer organizations will hear, whether it's from a CPA or an attorney or somebody else or something they read in an article online, that, okay, we're soliciting and we have a donate now button. We're new and but we have to register and we just have to bite the bullet to be compliant. And we got to pay that 10 or 11 grand. And what happens in a lot of cases, especially with those newer, less sophisticated organizations that don't really have the fundraising firepower, is that it doesn't work out. And like now they've got this filing obligation in 37 states. And it's better to have never registered in a state than to register and fail to renew, in my opinion. Because once you're on the state's radar, there's the expectation that they're going to hear from you every year. I'd say approach registration with more of a strategic approach. Maybe if your risk tolerance allows you to take more of a wait and see approach and register in an appropriate number of states for your organization. Do it where it makes financial sense. And again, organizations don't have any tolerance for risk, and so they just have to register in all the states for one reason or another, and I understand that. But I've seen a lot of organizations, small organizations, that come back and they're like, yeah, we need to like scale this back because our fundraising isn't doing what we thought it would. We're not growing as fast as we thought we would. And so that would be one thing that comes immediately to mind, is just that make sure you right size your registration.
That makes a lot of sense. I think being realistic about what is needed for your organization is good to think about. So that seems like really good practical advice. So thank you, Ron. This was really useful. And thanks for just explaining all the intricacies of charitable registration and the do's and don'ts. If you all want to learn more, we'll link Ron's 50-state guide below, as well as the video that he mentioned. And thank you all for watching. If you work at a nonprofit, if you support nonprofits, or you run charitable campaigns at your company, be sure to follow the Give Smart video series for more insights on doing good legally. See you next time.
Take care, Isabel. Take care, everyone.